If you make between $200,000 and $350,000 in Austin tech income, you're in the most misunderstood income bracket in this housing market. You're not entry level, but you're also not ultra luxury. And you can absolutely overbuy if you're not careful. So today I'm breaking down what this income range actually buys you in Austin in 2026 and where it makes sense to stretch and where people quietly make very expensive mistakes. I'm Amber Haley, and I help high-earning tech professionals relocating to Austin make smart housing decisions based on their income, keeping it grounded in actual numbers from this market. Let's start with the math. If you make $200,000 per year, your take-home after federal taxes in Texas is roughly $140,000 to $150,000, depending on deductions, benefits, and how much you invest pre-tax. That's about $11,000 to $12,000 per month. A conservative housing budget is keeping your total payment under 30% of your gross income. At $200,000 income, that's roughly $5,000 per month total housing budget. These are disciplined planning numbers, not max qualification numbers, so keep that in mind. Not just mortgage plus property taxes plus insurance. In Greater Austin, total property taxes are often between about 1.8% and 2.2%, depending on the exact area. So, what does $5,000 per month realistically buy you? Well, at today's rates, that typically puts you around the $550,000 to $650,000 purchase price range, depending on your down payment, rate, and other debts that you might have. So at that level, you're going to be looking at areas like parts of Manor, parts of Pflugerville, some East Austin pockets, certain areas of Leander, and select neighborhoods in South Austin. You are not at this point comfortably buying in Westlake, and you are not buying the Instagram modern downtown. And you know what? That's fine, because at $200,000 income, the smartest buyers focus on commute efficiency, property tax rate, resale strength, school district trajectory, not just square footage and ego. Okay, so let's move to the $275,000 income. At $275,000, your take-home might be closer to $175,000 to $190,000 annually. That's around $15,000 to $16,000 per month. And a disciplined housing budget here is roughly $6,500 to $7,500 per month total. That opens up a different tier. Now you're realistically in the $750,000 to $900,000 range, depending on down payment and your rate. Now, realistically, in the $750,000 to $900,000 purchase range, depending on down payment and rate. And this is where neighborhoods like certain parts of Avery Ranch, certain parts of Steiner Ranch, Circle C, some north central Austin pockets, select areas closer to the Domain start making sense for you. This bracket is where I see the most stretching, because you technically can qualify for more, but just because you can qualify for a $1.1 million house doesn't mean you should. The difference between a $850,000 purchase and a $1.1 million purchase in Austin, it's not just the payment, it's property taxes. At 2% on $1.1 million, that's $22,000 per year in taxes alone. That's nearly $2,000 per month just in tax. That's an entire car payment every month in tax. That's lifestyle inflation hidden in your property tax. Now, let's talk $350,000 income. If you're at $350,000 take home, that range might be about $220,000 to $240,000 depending on structure and equity. Now, that gives you about $18,000 to $20,000 per month. A disciplined housing budget in this range could be something like $8,000 to $10,000 per month total. Now that opens up the door to $1 million to $1.4 million homes depending on structure. Now, entry-level options in Westlake are becoming possible for you. Tarrytown is possible for you. Certain high-end modern builds near downtown are now possible. But here's the part that most people don't talk about. The jump from $900,000 to $1.3 million is often about location prestige, not just lifestyle necessity. Okay, you might gain 800 square feet, you might gain better schools, you might gain shorter commute, but your tax bill and risk exposure jump dramatically. So if you are single or dual income, no kids, stretching to Westlake at $350,000 income really only makes sense, I think, if you plan to stay long term and you have really strong financial reserves and you are not equity heavy and cash light. So if your compensation is heavily RSU based, some lenders average or discount that income instead of treating it like guaranteed salary. If your comp swings with bonuses, your true risk tolerance is lower than your headline income really suggests. This is why income alone is not enough. You need structure. So here are the 3 biggest mistakes I see in this income bracket. First mistake, copy pasting California budgets to Austin. Austin is cheaper than Palo Alto, but that does not mean that you should buy the maximum. Mistake number 2, ignoring property taxes. At $1.2 million, a house at 2% tax is $24,000 a year, okay? That is an extra huge car payment every month in tax, really more than a car payment. Mistake number 3, buying too far from your daily life. Now, if you work near Apple or the Domain, buying in far South Austin for square footage sounds logical until you start sitting in daily traffic. Trust me, commute time compounds stress. Now, here's the strategic takeaway. At $200,000 income, optimize efficiency, okay? At $275,000 income, you want to balance, upgrade, and discipline. At $350,000 income, choose intentionally between prestige and flexibility. More house is not automatically smarter. More leverage is not automatically more sophisticated. Smart buyers in this bracket think long-term. They protect their optionality. So if you're relocating to Austin from the Bay Area, from LA, Denver, New York, Seattle, anywhere out of state, and you fall into one of these income brackets, comment below where you're moving from. And if you're at Apple, Tesla, in a startup situation, you're fully remote, comment that too. Let me help you out because this market rewards strategy and I know you're strategic. Don't just buy what you qualify for, buy what aligns with your next 5 years. Don't forget to subscribe to the channel. I post new videos just for you every week, and I will see you in Austin.